Well, I think today we came in, Asia was down slightly with Shanghai and Hong Kong in reaction to the GDP that came out of China. Europe's pretty much even across the board, and we came in about even here in the US. I think what's optimistic is right now the Dow and the S&P 500 are still in striking distance all-time highs.
And what is it going to take to get there again? I mean, we're just a stone throw away from it.
Yeah, I think the market's been very resilient. What we're seeing is dips have been buying opportunities, and the market just keeps grinding higher. I think right now what traders are focused on are earnings. Earnings are actually better so far than expected. I think people are going to be looking for the forward-looking guidance going into the end of the year, particularly with the retail sector, because consumer spending is 2/3 of our economy. Usually these retailers end up bolstering their numbers as far as their workforce, and we're hoping to have a happy end of the year. However, I think some of the concerns are, going forward, Brexit right now is in focus. We've had some positive activity as far as negotiations for some sort of a deal to take place. That's going to have to get passed in Parliament on Saturday, and the deadline is on the 31st. So right now, Goldman Sachs is estimating that 65% chance that there is going to be some sort of a Brexit deal, only a 10% chance that there won't be a Brexit deal, and about a 25% chance that they're just going to walk away and there won't be a Brexit. So there's definitely a cautious air of optimism in the air. I think right now, if earnings continue to be better than expected, and the forward-looking guidance isn't dismal for the rest of the year, it could actually propel the market even higher.
You mentioned earlier China's GDP, which grew by 6%. What does this mean for multinationals as they continue to expand in China?
It's definitely a concern. I think probably with multinationals, it's more going to be on a trade deal than the GDP. GDP, people that trade China are going to be more concerned with that, simply because China, the way that they look at things are very long-term. They have long-term goals. They're building airports and building secondary cities in anticipation for growth in China. So I think for people that actually trade China or the currencies, that's going to be more of an impact on them. I think for most, though, everyone's going to be focused on a trade deal.
Speaking of retail sales, the data that came out was a little bit weak. What do you make of that going into next month and then going into the holiday season? I mean, the next number that comes out is going to be more important?
Absolutely. It's going to be more relevant as we get closer to the end of the year, particularly with the holiday season on the horizon. Like I said, it's 2/3 of our economy is consumer spending, so we're going to see that in the retail sector. That's going to be really in focus going forward.
Are you expecting a rate cut by the Fed at the end of the month? What are you expecting? And should there be one?
I think traders are all hopeful that that'll take place. I think it's sort of been worked in already, and as far as expectations are concerned. Right now, everyone's queuing in on the Fed speakers. There's a few of them speaking today for any indications on a rate cut.
Mark Otto, thanks so much for joining us. Stay with us. Wi-Fi AM continues after the break.